What do you think about Tesla at the moment and the stock price versus the financials? I know that you look at this. I know that you look at their financials quite regularly, and it's a company that you find very interesting for your training programs. But just to give you some numbers about Tesla, in January of this year, 2020, the stock was at $86.05, and as of today, in the UK market, is the UK time zone, on the 18th of December, it's $653.25. I mean, that's a staggering growth for a business, even for companies that they feel are COVID protected, companies like Amazon, etc. I mean, that's still over 600% growth, and they're valuing the business at $621 billion, when the revenue, I think, was just under 8 billion for the Q3, and it's just a crazy amount. And I wanted to ask you about the finances there, and do you feel the finances stack up? Are there some risks that you feel that the finances tell us in terms of the story for Tesla? What are your thoughts, Ted, on this stock that's like such a popular stock and such a popular subject right now?
I think you're right, Moeed. It's a fascinating stock to look at, and you can see on the screen that I've put a little quote up that says a bubble is a bull market in which you don't have a position.
Yeah.
And so the big question right now is, everyone's lips is it in a bull market? Is it a bubble? Is it justified? And you tend to kind of, the people who will defend Tesla to the absolute hilt are the people who own the shares and have seen those shares double and double again and double again.
Yeah.
And they're massive fans of Elon Musk. And then there's a lot of people who are sitting on the sidelines going, no, I'm not going to touch it. And they're saying, no, it's in bubble territory. And actually, it's also one of the most popular shorted shares as well. So there's a lot of big financial institutions out there who are betting that the share price will go down.
Yes.
Now, that's an interesting one when it comes to shorters, because if you buy a share, and I forget exactly what it's trading at, but if you buy a share today in Tesla, the most you can lose is the value of that share. So if the company goes to zero, you lose your investment. If you short a share, the most you can lose is infinite.
Yes.
Because effectively, if the share's trading at, I don't know, $58 a share, for example, and you buy that share, if it goes to $1 million a share, you've got to go back into the market, buy that share for $1 million to give the share certificate back. Okay, so if you've got a company which is being shorted, the people who are shorting, generally speaking, do their homework. They do a lot of analysis before they actually take their position, because it's very, very high risk.
And just to make a note, that the share price today is at $653, just over $653.
So $653. So there you go. So and I'm not an investor. So full disclosure here, Moeed, I'm not an investor in Tesla.
Neither am I.
Sit on the sidelines. I do have exposure to Tesla, though. I'm a investor in a unit trust, and I know that the unit trust that one of the unit trusts that I invest in has a big exposure to Tesla. So I have benefited indirectly from this share price, but I'm not sitting there opening up my portfolio app each morning and kind of congratulating myself on a very astute investment. So in terms of looking at Tesla, let's start off just looking at, and what I'm going to do is I'm going to share with you the financial statements of Tesla.
Yes.
And the financial statements of Tesla tell quite an interesting story. So hopefully you can now see this on your screen.
Yes, yes, I can.
And what we're looking at here is the financial statement. So this is the audited reports. This is not the quarterly earnings. So these are out of date. We're looking at 2019 year ended. And obviously today is, we're getting to the end of December 2020. So we're looking at old figures here. And it's if we're going to talk about stock prices, we almost don't want to be talking about these figures. I mean, this is a company which is, you can see the sales up at the top. They're growing from 8.5 billion up to about 20 billion over the past few years. So it's a successful story. The cost of sales has been growing as well. It's making a gross profit, not a big amount. It's 4 billion of gross profit. It's making a loss for 2019. Now, I know it's broken even in 2020, and any new company is going to make a loss to begin with. They've been very clever in the way they've positioned themselves. They haven't gone in kind of mass market. They've gone very aspirational. So, it's been making a loss. They've turned the corner now. They're starting to make a profit. If we look at the balance sheet, we can see the balance sheet. Their total assets is about 34 billion. The total liabilities are 26 billion. A lot of those liabilities is debt. So we can see the debt here, 11.6 billion. And there's a little bit of equity, and most of the equity, they've raised a lot of money from the shareholders, and they're sitting on substantial losses as a result. And again, that's okay. Startup companies, especially as ambitious as Tesla, we'd expect to see them making losses, then they hit break even, and then they start to make some profits. The interesting one is looking at the cash flow. So here's the cash flow statement. Pretty important. Let me just put up the cash flow. Here we go. So this line. Let me just annotate it so we can actually see. So this line down here, this is a pretty important line. Okay. So this is looking at the cash generation of the business. So up here, we've got the profit from the profit and loss account. But, I'm an accountant, Moeed. I'll make the profit whatever you want, within reason. But we can play around with profit. Cash is very difficult to manipulate. And what we saw in 2017, that Tesla was on a cash burn, and it was eating through its cash. And there was a lot of sort of assessment of, they've raised a lot of money. Are they going to burn through the cash before they've actually, delivering and actually starting to generate cash? So they're generating cash now. What is it? 2.4 billion. Okay. So, things are not looking that bad. They're generating cash. There's the 2.4 billion. You'll notice a little bit further down, if I just clear that, and we just scroll down a little bit further. What we notice down here, a little bit further down, is here we've got their debt. So they are refinancing their debt each month. You'll notice that these numbers here, they're raising more than they are paying down effectively.
Right.
So, but the debt is fairly stable. They've got a cash pile. They are, they're sitting reasonably pretty from that perspective.
And are they able to? And I know this is something that you look at as one of the 5 things that you look at in the business. Are they able to pay this debt off?
It's an important aspect that they are generating cash, but they're not trying to pay off the debt. What they need to be able to do is to be able to service the debt. Now,
Right.
this is a slightly sort of strange company from this perspective. So when we talk about servicing the debt, what we're looking at is comparing the operating profit, which is this number here, and we're comparing it to the interest expense, which is this number here. So the answer is, right now, they can't afford their debt. They're making a loss, an operating loss of 70 million, and their interest on their debt is 685 million.
Wow.
Okay.
Yeah.
However, if you look at the trend, what they're doing is that the story with Tesla is we're turning a corner. So the operating profit is getting less and less and less. We look at 2020, then unaudited figures, they're actually claiming, we've made a profit now. The interest is still sitting there. So to a certain extent, as long as they've got the cash in the bank to pay the interest, they're paying it out of the money that they've raised, if that makes sense.
Right.
So the question really is, are they going to burn through that cash before they actually manage to deliver the goods, start generating cash, and be running as a kind of a normal self-sufficient company?
Right.
And I think the answer from looking at these figures is, Yes, they are. You know, they're going in the right direction. They're starting to generate cash. They're starting to make a profit. You know, they're going in the right direction. The balance sheet looks reasonably strong. We just pull up a little analysis of the balance sheet. So here I've plugged a few numbers into my little spreadsheet. So just to make life a little bit easier, we can see. So here is the sales, 24.5 billion. Cost of sales, so the gross margin is about 17%. That's about reasonable for a car company. They're running the business, so they are making a loss. These are 2019 figures. There's the interest, which is very high. We look at the balance sheet. These are the non-current assets. So this is the stuff they need to run the business with. So plant, machinery, equipment, etc., etc. Here's the current assets, which is stock, work in progress, people who owe them money, and the cash they've got in the bank. This is the stuff they have to pay soon. So if we compare these two together, they can meet their obligations as they fall due. I'm not too worried about that. They've got a lot of debt, but they do have equity as well. So they've probably got more debt than they might like sitting on the balance sheet, but they still got a reasonable amount of equity. They are generating cash, which is good. They're investing, they're raising a little bit of extra money from financing. So their net cash flow from the overall period is positive. People talk about free cash flow, which is effectively, this is the cash flow net of any reinvesting activities. And even there you can see for these guys, they're generating more cash than they're investing. Right. They've got positive free cash flow, and that's a good thing. So at the end of the day, the numbers are looking okay. The big challenge is trying to equate these numbers to the market valuation.
Yeah.
And just to put some numbers up here. So this is a little bit out of date. This is on the 16th. So this is yesterday's figures that I pulled off the internet. I think you were quoting a little bit higher today, so maybe it's gone up. So, at the end of the day, we're talking big numbers, okay? And the key numbers here are looking down the bottom. We're looking at the market cap yesterday, $585 billion, a PE ratio of 1,223. Now, I'll explain the P ratio to you, but here we got the P ratio 1,223. The market cap is 585. The P ratio is the price to earnings ratio. And effectively, it's the multiple of the earnings that you're buying. So if you buy a company which it makes $1 in profit, and you pay 10 times that $1, you're buying at a P ratio of 10 times. So effectively, for every dollar of profit you're buying in Tesla, you're paying over 1,200 times for that profit. Okay. The other way of looking at it is to turn it the other way around and look at the earnings divided by the price, which gives you the yield. So if you buy, if it's $1 and you pay $10 for it, that's the equivalent of a yield of 10%, for example. So the yield is 0.08%, which is basically 0%. You could get better than that in the bank, which flashes all over this, saying, this is a very, very expensive stock. And it is an expensive stock, and there I've shown the share price, the movement in the share price. I've gone right back to when it started, and you can see it just tootled along, and then suddenly it just went ballistic. It captured the imagination. Lots of people have invested. The market cap we're looking at, we also might like to look at it on
What's the NAV?
So the net asset value, this is the assets net of the liabilities, okay? So effectively, the number we're looking at is, let me just pull up the balance sheet. It's effectively this number here. It's the equity in the business. It's these two numbers here, okay? So when we think about the NAV, let me just pull up here. Here's the balance sheet. Here's the total assets. These are all of the liabilities. If you close the business down, theoretically, you end up with the net asset value. And the net asset value is the same as the shareholders' funds. So, Moeed, what we're really saying here is that if you want to buy Tesla, what you're going to do is you're going to be paying this market cap here, this $585 billion. That's what it's going to cost you as an individual. Moeed, I don't know if you've got $585 billion stuffed down the back of your sofa, but if you have, I'm not sure this is the best thing to be buying. But let's say you want to buy it. You want to buy a Tesla. What you're actually doing is you're buying all of the assets. You're buying the plant and machinery, you're buying the cash, you're buying the work in progress, but you take on the liabilities, you take on the accounts payable, you take on the debt, etc., etc. So what you end up with is the net asset value. And this gives rise to what we call goodwill. And goodwill is the difference between what you pay for something and the fair value of the net assets. Now, goodwill only arises when you actually buy a company. So if you look at, I don't know, Coca-Cola's accounts and you see they've got goodwill in there, that's because Coca-Cola has bought other companies. It's not just Coca-Cola in their range, they've got lots of other drinks as well. Okay, so what we're looking at here, these numbers are basically telling us that, you know, on one hand, it's a very, very expensive stock. You're paying a multiple of earnings. And the other hand, goodwill is very, very high. You're paying a multiple of earnings. Now, I'll give you an example here, Moeed. When Facebook floated on a PE ratio of 100. Okay, yes. That's a yield of 1%. And I looked at it, Moeed, and I said, do not buy shares in Facebook because they are too expensive. Well, Moeed, that's the reason I'm talking to you today. Okay, because if I had made that investment, I would be calling you from my super yacht somewhere in the Caribbean, not from my camper van outside my home in Southwest London. Okay, it was the wrong decision. Okay, yeah. So don't take my advice because I'm not qualified to give you advice, and you can miss out on these bull markets. But what I can give you is my opinion: is this looks expensive. This looks massively expensive. Okay, now the reason I got it wrong on Facebook is, well, there's a couple of reasons. First of all, there was a great potential in Facebook. It was a very young company. It wasn't making a lot of money from advertising. The earnings were very, very low. Not a lot of people were on it. It had a great potential, and I missed that. Okay, so that's the first thing to remember. I should have seen it. I should have made the investment. The second thing is Facebook benefits from what we call the network effect. People are on Facebook. You're on Facebook because I'm on Facebook, and I'm on Facebook because you're on Facebook. My kids aren't on Facebook because I'm on Facebook, but that's a different matter. That's a challenge for Facebook to stay relevant into the future. Okay, but the thing with Facebook is everyone's on it, but because everyone's on it. Okay, I'm here in the UK. You're here in the UK. What's the best-selling electric car in the UK, Moeed?
See, I thought it was the Toyota Prius. Okay, but that's a hybrid.
That's right? A hybrid, exactly. Yeah. It's the Nissan Leaf. Okay, yeah. Nissan isn't even. Yeah, we're not even in the figures here. So Nissan makes the best-selling electric car. So what are you buying here with Tesla? Are you buying the fact that? And I read an article yesterday that says in order to justify the valuation, in order to actually come good on this valuation, they're going to have to sell 1 in 3 cars.
Yes.
So in the world, every third car is produced and is a Tesla. I'm just not convinced by that. Now, you might say, well, hold on a sec, Ted. It's not the cars, it's the battery power. It's that, you know, and yes, they're investing in battery power. I'm sure they've got lots of patents. But do they get a monopoly? Do they, you know, are they really going to be the, you know, the sort of, you know, the only people? SpaceX. I mean, I'm not convinced about SpaceX, whether we're all going to go and live on Mars. I can think of a few people I'd like to send to Mars, but not necessarily to bring back. But we think about, you know, there's Virgin Galactic, for example. So there are lots of companies who are playing in that area. So the question you've got to ask yourself is, if you're going to buy this company, what are you buying? You're buying the future story. Okay. And if you're buying the future story, then you've got to know, you know, what that future story is. And if you are buying the future story, it's already reflected in the price. You know, if you want to buy a share that's going to go up in value, you want to get something that's cheap before the story's there. The story's already there. I'm not saying you can't make money, Moeed, okay? Read my lips. There's a bigger mug than you out there. There always are bigger mugs than you, and there's always going to be somebody else who will buy it until the day there isn't, and then it closes. The problem is, Moeed, markets can remain irrational longer than you and I can remain solvent.
Yes.
Okay. So, and this is the shorters. The shorters are sitting there going, it has to come down. It cannot defy gravity forever. But the problem is they've got to meet their margin calls. It's costing them money. And at some point they just go, they throw in the towel. So quite often people are talking about this, and I give you another car company that did this. And this is a great story, Moeed, if we've got time. So this happened to Porsche in 2009. Okay, so in 2009, the banks are collapsing. We're all going to hell in a handcart. The shorters looked at Porsche and they said, here we go. What we're going to do is we're going to sell shares in Porsche. So they borrowed them from their asset manager friends, sell them into the market, and the shares in Porsche all fell. Now, if you're a shorter, you've got to close out your position at some point. And who was sitting on the other side of the trade? I tell you who it was, Moeed. It was Porsche. Porsche were buying their own shares. So when the shorters went into the market in order to close out their positions, to buy the shares back, to give them back to whoever they'd borrowed them from, Porsche said they're not for sale. Now, this caused a massive panic in the market because all the shorters gave, they have to be for sale. And Porsche went, we're not selling them. So the few shares that were trading went up in value. Okay, this is known as a short squeeze.
Yes.
So that's what happened. And if you look at Porsche back in 2009, that's exactly what happened. The thing is, it actually came back down again. Porsche made more money buying and selling its own shares than making and selling cars in 2000.
Yeah, exactly. That's crazy.
It's crazy. Okay, and they tried a reverse takeover of Volkswagen as a result.
That didn't work.
That's a kind of different story.
Yeah.
So what you see is that, for Porsche, it went all the way up and all the way back down again, and that's known as a short squeeze. And there's a few people saying, we think this is a short squeeze. I don't think it's a short squeeze. This is Robin Hood. Okay, this is Robin Hood. This is apps like Robin Hood, where Fred in America can go, hey, I've heard of Tesla. It sounds great. Elon Musk, he's my kind of guy. He doesn't stick to tradition. He's a Steve Jobs. He's very very a charismatic, a real kind of a real divisive character. He's Trump. He's what you and I call Marmite. You love it or you hate it, but everyone's got an opinion about Musk. Okay, so there's lots and lots of people, and it doesn't take that many people just to say, I'll just buy a few. I've got a couple of $1,000. I'll stick it into Tesla. Woo! Here we go. Look, I've just doubled it. Hey, I'm on for the ride. Okay, so there's a lot of people who are sitting there, who are sitting on those shares, and you think about the kind of the bar stories. I bought a share in Tesla yesterday. It went up. I've just made money. I've just made the price of a round, and you're sitting there thinking, it's not too late. I've got to buy. Everyone else is talking. Everybody else is making money. Everybody, and this is the bubble market. Okay, so this is a classic bubble that you buy because the share price is going up, and the share price goes up because you're buying. Okay, this stock has disconnected from the fundamentals. Okay, it does not reflect reality. It reflects potential. And what I would suggest to you, Moeed, is that even the potential is overpriced in this world. Okay?
Absolutely. Yeah, because I was looking at, what I really want to go through and you're thinking ahead already, because the potential, it's priced in the potential in the market and the fact that Tesla is going to dominate this industry. It's going to have...
It's not going to dominate it, Moeed. It's going to annihilate it. Tesla has the same price as the next 5 biggest car companies in the world put together, and that's before we get to General Motors, BMW, Ferrari, Honda, etc. Nissan, who I mentioned, they're not even in the top 10. They're somewhere down there on 20 billion market cap, and they're making the best selling. We're going electric, Moeed. You know that, and I know that. It's happening. Okay, but I don't think we're all going to be driving Tesla cars. If we are, it's a buy. It's just about a buy because it's kind of already reflected in the price. It's priced as if we were all going to reflect that. Okay, so it's a high risk. It's a high risk strategy. My opinion. Because I can't give you advice, Moeed. I'm not allowed to give you advice, but I can give you my opinion. My opinion is you missed the boat.
Yes.
Okay. If you're sitting there thinking, damn, yep, absolutely, you missed the boat. Go and find another Tesla. Wait for the next one. I reckon you're going to make more money in Bitcoin than Tesla. But that's my opinion, Moeed, and that's a different topic altogether.
So the Tesla stock, as you're saying, is expensive you've missed the boat, right? It doesn't mean it might not go up. These are just our opinions here, but it looks like we've missed the boat on the big high increase in price, right? And the profits that you get from it. So what about those that hold the Tesla stock? Because you said that the way that Tesla stock is priced and its market cap is based on the future that Tesla is going to have one in three of the cars in the world is going to be a Tesla. But when I looked at the research and I looked at all the car companies out there like Audi, Ferrari, BMW, Mercedes, Honda, all of them, they plan to have, some of them have fully electric car companies out now, only a small number, but the majority are looking to roll out their electric cars in 2021, 2023, and 2025. So when those cars come out, the competition's really going to heat up for Tesla here, right? So that's probably going to be an indicator of how well they do, what impact that might have on the Tesla stock. But what about the financial fundamentals? What are the things or the indicators that they're going to be telling us that's really going to tell us, well, hang on a second, something might be turning around here, either that the bubble's going to burst or that the stock price is going to plateau?
That's a good question, Moeed. I think the danger here is trying to time the market. Okay,
agreed.
It's really difficult to time the market, and if I knew what to look for, again, I wouldn't be sitting here. I'd be sitting, having made my fortune. I think the key is, if you're an existing holder of Tesla, I think the question you've got to ask yourself is, have you got your shirt in there? If you've made a lot of money, I would say, in my opinion, now's the time to take a lot of that money off the table. Okay, you've done very well, thanks very much. You want to take it off. The question is it going to double and double again?
Yeah.
And I can't see it doing. It may go up a little bit. It may double again, but I'm not sure you're going to see the kind of. We're not going to see that continued meteoric rise that we've seen in the past. So if you invested, I don't know, put $1,000 in, and your investment's now at $2,000, take $1,000 out. Then you've money riding on this thing, and to a certain extent, you're playing, psychologically. I mean, realistically, it doesn't make any difference, but psychologically, it's quite nice that you now cannot lose money on Tesla. Okay, yeah. So I would suggest you probably want to, reduce your holding in Tesla. If you want to keep a position in there, then you might want to think about having a stop loss if you're trading on a platform that allows you to have stop losses, and that's something which automatically signals a sell when it goes below. It's the trading platforms that tend to have that. You've got to be careful though, because you may miss it. So even the stop loss may be triggered, you may struggle to get it into the market. I mean, there's a sense that when this goes, it's going to be like a dam exploding. It's just get completely wiped up. There's going to be I think the analogy is, you're in a ballroom, there's thousands of ballrooms, only one fire exit. When the fire alarm goes off, you want to be dancing closest to the exit. You want to be first out. You certainly don't want to be last out of this trade, because it's going to get very, very messy. Okay?
Are there any fundamentals and
secret to?
Sorry, go ahead.
Yeah, what I was going to say, if you look at it, I mean, fundamental a long time ago. Okay, I mean, we're not talking about anything logical here. We're looking at a company, we're looking at the finances, we're saying this looks okay. The company, it's a nice business model. It's no longer making a loss, it's making a profit. It's starting to generate cash. It's a nice car. It's an aspirational car. It's kind of, it's a BMW or a Porsche rather than a Ford Fiesta or a Nissan Leaf, for example. We don't aspire to have a Nissan Leaf, but I aspire to have a Tesla. It's a bit of a badge. It's a status symbol. It's a Porsche that, that runs on electric. But Porsche will produce electric cars, and BMW is producing electric cars. And you're suddenly starting to think that actually, it's a crowded marketplace. Tesla doesn't stand, the gull wings. I mean, if gull wings, sell cars, guess what? Everybody else is gonna copy that. Okay. Yep. And this is the challenge we see in the car industry. permanently. There's a great example of the kind of the you may be familiar with the BCG matrix and the kind of the cash cows. And
Yes.
the problem is, as soon as you come up with a cash cow, as soon as you come up with something on your car that makes it really desirable, like electric windows, everybody produces electric windows. Then
Yeah.
you do climate control, then everyone's got climate control, and then you do ABS brakes, and then everyone's got ABS brakes. It's very easy to copy.
Yeah.
You can't copy Facebook because of the network effect. It's got this big economic moat. There's no economic moat surrounding Tesla. They don't have something that defends their position. If they come up with a great battery, everyone's going to copy it. May take them, but they're going to copy that. Okay. Tesla has nothing that says it's going to be, all the other car companies are going to get wiped out. It's going to be the winner. And I think that's the key thing to remember when you're investing in Tesla. It's trading on, it's a bit like somebody saying to me, Ted, tomorrow it's going to be the weather it is in Dubai, but in UK forever. Yeah. And I'm going, well, that's quite nice, and it's possible, but it's unlikely. Okay. Right. And that's what you're buying here. You're buying sunshine forever, that it's never going to fall over. It's, life's going to be perfect.
Right. Okay.
At some point, you're going to put your hand up and go, Moeed, the emperor does not have any clothes on. Okay. We can call that, and it takes time for the population to kind of agree. So the little boy goes, the emperor hasn't got any clothes on. The question is, how long does it take for everybody to go, actually, you know what? The emperor hasn't got clothes on. And what you've got to remember is that you and I, we're doing fundamental analysis here. We're looking at the accounts. We're trying to get a feel for the company. We're looking at the share price, okay? Yeah. The Robin Hood investors aren't doing that. They see a chart that does that and think, well, if it's done that, if it's gone up in the past, it's going to go up in the future. I'll carry on buying, okay? So I'll put that comment and I'll refer to it again. Markets can remain irrational longer than you and I can remain solvent. It will come down in value. It's a question of when, not if, but the if may be a long time. Yeah, that's my opinion, Moeed.
Right. So so if you've got the stock, you've won anyway, especially if you've bought it earlier on in 2020. Exactly. You've made money. Psychologically, you're not going to lose any, so don't worry about it. And actually, that's a great position to be in. Profits. Yeah, and actually, that's a great position to be in psychologically as an investor, right? If you're always going to win.
Absolutely.
Right. And some people think, well, I could have won more than if I didn't sell it. But you can never price the market. No one knows. Even Warren Buffett says it, and he's worth 48 billion. Absolutely. So if he's saying it, then it's got to be right. Right. So, yeah, absolutely.
You don't have to get in at the bottom, and you don't have to get out at the top.
No.
Okay. But you want to get out before it turns.
Yeah. Right. So we have to look at the markets. We've got to look at the other players out there. And you're absolutely right about the automotive industry. I've worked with companies like Valeo, et cetera, that do automotive supplies, and they've said exactly what you said, which is once something comes out as new technology, it becomes a commodity very, very quickly. Everyone's done it and the price goes down. So I guess it's a question of how long Tesla is going to be able to run this advantage. And even with the patents that they have, the patents that they have on the battery technology, it's really a question of how long they can protect, or how long until someone is able to copy it in a way that's legal. And come out with their own alternative version of those batteries. And the other thing we have to look at are the tax credits, because I think it's about 1 billion per quarter that comes from the tax credits that they sell to other automotive makers. So that's something to look out for. There's been a lot of buzz about this on social media. So if the regulators in America change their policy on this, that's going to be an interesting thing to watch out, because it will dip their revenue per quarter there. And also, once those car companies that they sell those tax credits to,
but we've got to. Yeah, you're absolutely right. But the challenge here is that when we talk about the tax credits, and I'm not a tax accountant, so I don't exactly kind of know exactly what it is. But I mean, whether they're making a profit or a loss, that's a psychological thing.
Yes.
Tesla's now making a profit. Fantastic. It's making that much profit. Bit like me saying, Moeed, I found $1 down the back of my sofa. I'll sell you my sofa for $1 million. And you're thinking, oh, there might be some more. There might be at least $1 million down the back of that sofa. I'll buy it. That's
so you're saying the tax credit's not that important. Actually, it's really the profit, and the profit is minuscule compared to the value of the business. That's the important part.
Absolutely. So the profitability of the business, the ability to generate cash flow, it has turned the corner. I think it looks profitable. It'll be interesting to see the audit accounts to make sure that that the auditors actually like it, and make sure that, because what we're looking at for 2020 is unaudited accounts. It'll be interesting to see the auditors make sure that it is okay. Tax credits. If you make a dollar loss and you turn around and make a dollar profit, that's a great market story. We're now profitable. Okay, you're only making a dollar, but you're still, the story is there. Tesla's turned the corner. It's defied its critics. And you start to kind of, people buying into that. Tesla, it'll never make money. It'll go out of business. It'll burn through all its cash. It hasn't. It's done. It's a great company. Don't get me wrong.
Yeah,
I'm a
agreed.
big fan as a company. I'm just not going to pay that price for it.
Yeah.
It's a bit like, you showing me your house, 2 up, 2 down. And I say, Moeed, it's a lovely house. And you say, Ted, I'll sell it to you for $26 million. I'm like, Moeed, you're living in cloud cuckoo land. I'm not going to pay that much for your house. It's a lovely house, don't get me wrong, but I'm not going to pay that much for it.
Yeah. Okay. So be careful, buying into this stock now, because it's overpriced. You've probably missed the boat there.
In our opinion.
But there are, how many companies was it? Tens of thousands of companies out there that you can still trade on the public market in America alone. So there's certainly other better deals to be had, in our opinion, based upon the financials and where we see the potential for the business. So this was really interesting, right? So, because there's been a lot of buzz about those tax credits, but you're saying it's not really the thing to look out for. It's so minuscule.
I'm not a trader. Trading is about short-term, taking a short-term position.
Yeah.
So quite often it's about buying a stock and then selling it, sometimes the same day. The hedge funds are trading nanoseconds. It's called high frequency trading. Okay. Yeah. I'm a long-term investor. I'm a buy and hold. And that's what Buffett is. And he's made a lot of money out of buy and hold.
Yeah.
I don't think this is on Warren Buffett's. Yeah. So I don't think this is on Warren Buffett's a buy list. Okay, as a buy and hold. If you want to trade it, then that's a different story altogether, because you're looking at momentum, you're looking at kind of market movements on a day-to-day or hour-by-hour basis. Okay, but for you and I, with a long-term buy and hold, this buy and hold opinion, I'm convinced.
Yeah, great. Well, look, let's see what everyone comments about this. We'd love to hear what everyone has to say, and what are their thoughts on Tesla? Do they think it's a good bet to have even now and it's got long-term value, or do they think it's going to go down and somehow, and in some way, shape, or form, the bust is going to come through and it's going to be a big drop? So yeah, let us know what your thoughts are on the comments below. Like, share, subscribe, and we'll come back, and Ted and I will talk about another company that's a hot topic right now and really popular. But Ted, thank you for sharing your thoughts. This was really, really interesting, and to get your viewpoint on the financials.
Okay, well, thanks a lot, Murray. Good to talk to you again.
Cool. Thank you.